Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I want to do an update on what Cathie Wood said in the video that she posted on the ARK Invest channel on YouTube. So if you want to see the full video, obviously go on and check it out. So if you follow my channel, you know that I made different videos with different personalities, okay, like Ray Dalio, Warren Buffett, Michael Burry about inflation, and Cathie Wood, obviously. So you have different opinions, right? Different parts, and we can, understand what they have to say and try to make our own decisions. The beautiful thing about finance is that there is not a perfect formula, and that's the beauty of it. In today's video, I want to bring Cathie Wood's main idea actually on the stock market crash, innovation stock that are crashing comparing to actually value stocks, and her idea about inflation, which she's pretty clear about that. And she thinks that over the long term, people are wrong about inflation. Obviously, the only thing I ask you guys, as always, is please leave me another like. It doesn't cost you anything and it's very important. I thank you for it. And subscribe to the channel so you don't miss any new updates. Let's begin. Alright guys, so if you follow my channel, you know that back basically 3 months, 4 months ago, actually before that the 10 years treasury yield just started to spike up, I brought you the JP Morgan analysis, right, on the 2021 stock market outlook that they did. If you remember back then, the JP Morgan report was pointing out how with the reopening of the economy, we should have seen inflation coming, mostly because of an unbalanced position between supply and demand. Because of the pandemic, a lot of businesses shut down and they stopped the production for a while. So when you reopen the economy, people will be back on spending. They want to do stuff. So the demand side is huge. The supply side is not able to keep up for a period of time. Now, this is exactly what has happened. And JP Morgan says that going on into 2022, 2023, this effect should actually come back to a normality. Now, Cathie Wood is exactly on that idea. What Cathie Wood said, however, is maybe a little bit different because she points out a lot in terms of technology, but I agree with her as well. Now, first of all, she says something that I was wondering, and so the video was interesting because she said, look, all the commodities, okay, so we have seen a spike in prices. For example, this is crude oil, and if you remember, I told you, look, take a look at the 65 level, is gonna be key. It's a strong resistance. Now, we don't want to see that actually exploding. But then also other commodities, right? For example, one of the craziest one is lumber. So the wood, actually, look at that. This is a huge explosion over the last few months. Obviously, if you are into real estate, renovation, all this kind of stuff, this is affecting the prices, as well as different stuff. So we have seen, for example, gold obviously going up a bit, but not that crazy. Silver as well, basically all the commodities. We have a shortage in the chip industry. All this kind of stuff is happening right now, so obviously there is inflation. But then what she says is that, well, so we see all this kind of stuff, but we have the 10-year treasury yield that actually, is spiked up. It touched 1.77 and now is pulling back. So why is that? She says it's confusing. She says also that it reminds her of 2006. We don't really know, right? Because if the market is going to expect inflation for real over the long term, this should continue to go higher. The fact that she said that the 10 years treasury yield is actually pulling back now. It's a sign of confusion. We don't really understand whether this inflation is just temporary or not. According to the 10 years treasury yield, it seems to be that the inflation is temporary, as well as JP Morgan said. Now, if you remember back then, I did you this kind of video. Actually, I was telling you the interest rate was going higher. The market was freaking out, and I made this graph telling you that it was not something strange, right? If you remember, I put this green level over there between 140 and 250, and I told you that this, in my opinion, is the normal range. What was crazy was the pandemic event over there, so the interest yield very low. But on average, historically, we have the interest yield just trending lower year after year. And Cathie Wood in the video says, well, you know what? It will be kind of interesting if basically everyone is wrong about long-term inflation. We will not have long-term inflation. And she says also, what if the interest yield has already peaked, and from now on, this is the high part of the cycle. So from now on, it will continue to trend lower. Now, obviously, she says that this is not a popular opinion, but she has a motivation on it. And her motivation is that there are a lot of catalysts which are against inflation. Now, the first two catalysts that she says are very related to technology. So, technology will disrupt old stuff. And the beauty about technology is that obviously it is cost saving, all right? So if you go back in the 50s, just even traveling was extremely costly comparing to now. I can take a plane, travel around the world, basically very lower amount of money comparing to how it used to be in the 80s, 90s, okay? So just think about that. But anyway, she says that on different sectors altogether, technology is right now pushing costs lower. She says in the healthcare, transportation, electric vehicles, batteries, all of that. Okay, so over the long term, innovation, according to Cathie Wood, is pushing what she calls the good deflation. The good deflation is that technology going on pushes prices down. So obviously inflation is something that it's not in line with this view, right? This is against inflation. It is true because if you take a look at the US, and basically since where the internet has been invented and technology has really started to keep up, right? So the early 2000s, the trend has always been lower. Even though in the market there are still more cash, this trend is something that we have seen in history. And she says that, well, you know what? It's going to continue because innovation is not finished yet. Then we have, according to Cathie Wood, the bad deflation. Now, the bad deflation is still against inflation, right? But it's that kind of stuff that happens because technology disrupts old enterprises, right? So the old industry, old mentality, the old way to do things, they do not adapt, they do not innovate. So they are at a point where technology is stronger than them, and their only way to try to survive and sell the stuff is to put artificially prices lower, okay? Because otherwise they are not able to be in the business anymore. But by the way, this is still, once again, something against the inflation, long-term inflation hypothesis. Then, this time, she says a third catalyst against long-term inflation. This is interesting. Basically, she's pointing out that all these kind of commodities pricing exploding right now is because the economy is reopening. So you have a huge demand. What you have is that if you go to the store, you can see that a lot of stuff actually looks sold out. Or maybe if you want something, if you want lumber right now, for example, it's very difficult to find one. But she says that this is just temporary. So going on in the future, you will have, first of all, the demand that will decrease because after 1 year of lockdown, basically everyone now wants to do the stuff, wants to renovate. Maybe if they have businesses, they want to reopen. So maybe they have to do some work before reopening and all of that. That's fair enough, but it will not last forever. And what she says is that businesses are now afraid of not finding material in the long term. So what those businesses do? They buy lots of stuff to build up inventories because they think that this huge demand will continue long term. So they don't want to be in that position where basically they have sold out everything and basically they have customers coming to them and they don't know what to sell to them, right? So here is what she says, but she thinks that this demand will not last forever. So we will come to a point where those inventories will be too high in terms of value of goods inside of them and the demand will decrease. So we will come to a point where the price of goods, and especially the price of commodities, we slow down because of inventories have already been built. So you have this point where suddenly you have more supply than demand. So basically they will stop to ask for more commodities and goods as long as they have not pushed the inventories down. Right, so here is what she said is a third catalyst, and obviously it is still correlated with the hypothesis against the long-term inflation. Now, when she says that, obviously she's saying that right now innovation stocks have been beaten because all those stocks actually they have revenues coming on in 5-10 years, right? So the market right now doesn't like those kind of companies, but she thinks that now a lot of them are starting to be in actually bargain territory. So this is a quote that she said at some point. Here is what she said basically in this video. And another thing that she points out is how probably stocks have been selling off, especially innovation stocks, because of the Biden plan to actually increase capital gain. Now, I agree with what she says about long-term inflation. I personally do not agree with this statement of the tax plan. What I mean by that, obviously the tax plan pushes stock prices down. But if it was for the tax plan, you will see a correction in the overall market. Okay, not just in innovation stock. So that's just my opinion. I do not agree with it, but anyway, it's a fair statement. Now, obviously, she thinks that innovation stocks will continue to do great and that right now lots of them are at bargain price. Now, what's my idea on that? I agree with her in the long-term inflation statement. I think that this long-term trend of inflation actually staying low will continue after this disequilibrium has happened, right, with the reopening of the economy. It might take 2 years, I don't know, but in my opinion, it will stop at some point. Now, my idea is that when she says innovation stocks is where probably someone can misunderstand that. Now, I agree that today we are gonna have huge bargain on the stocks of tomorrow. However, what I think also is that in 2020 we have seen a little bit of madness in the stock market, especially when it comes to innovation. And what I mean by that? I mean that in 100 companies, you will probably have 1 or 2 maximum companies of tomorrow, okay? So really successful businesses. This is what has happened as well in the dot-com bubble. You had thousands of companies in the internet space, but just 5 or 6 of them are still here today. And those 5 or 6, obviously they did extremely great, but not all of them, right? I mean, a majority of those companies just went bankrupt or they do not exist anymore today. So what we saw in 2020 was, in my opinion, too craziness in the market. At some point, it was just ridiculous even to upload a video saying something, because whenever you have a new stock, a new SPAC, then the stock was up, I don't know, 400%. But that was just obviously exaggerated. So yeah, it can be because of market conditions, but I think that the drop that we have seen on average in innovation stock was because lots of them were just silly valued. Okay, just the price didn't make any sense, and obviously the market is pushing them back down. It's absolutely normal in my opinion. But I agree with Cathie. I mean, if the market continues to avoid innovation stocks altogether, we might see that literally those very few that can be successful, well, you know what, if the price continue to go down, we will really have bargains. So this is why actually also on Palantir, because people misunderstand me, I am not bearish on Palantir. I just didn't want to pay very high price for it. I agree, coming on, if we continue like that, we could see really bargains. Just the difficult stuff is to understand the very few that will be successful. This is the most difficult thing to do in my opinion. Anyway, I hope you find the video interesting, guys, and leave me a comment below. Tell me what do you think about that. Subscribe to the channel if you want, and as always, guys, have a wonderful day.